Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be discussing beta and how you guys can calculate it for yourselves. So for me, beta has always been sort of an interesting metric to look at, but from the beginning at least I didn't really understand what it was, and where different websites often had different values for it, so it was definitely kind of confusing at the beginning. So hopefully I can try to explain some of it to you guys here and clear that up, and then I'm also going to show how you can calculate it and just how some tweaks in your calculations can actually change the values quite a bit. So if you guys do enjoy these videos, make sure to like the video and subscribe if you haven't already. And now that we're done with that, we can get right into it. So if you don't know what beta is basically just a measure of the volatility of a certain stock compared to the overall market. So in most cases, this overall market that we use is the S&P 500, and in this case, that's what I'll be using as well. So you could say that the S&P 500 will always have a beta of 1, which means that it's just as volatile as itself, which makes sense, right? So a beta of 1.3, for example, means that a stock is 30% more volatile than the S&P 500, and a beta of 0.7 would mean that a stock is 30% less volatile than the S&P. So most of the time, the beta value that you see on various websites is what's called a 5-year monthly beta. So they take 5 years of data and they sample the stock price and the S&P price at the end of each month, and then they use that price to calculate the beta. So basically what I have here is exactly that, the stock price at the end of every month, going back 5 years of Apple in this column, and then the S&P 500 in this column. And then in these two columns, basically what you do is you calculate the monthly return of each month for Apple and the S&P 500. And then in this cell, I just use this slope function, which basically it calculates a least squares regression on the data, and then it gives you the slope of the least squares regression line that it found. And so if you don't really know what that means, it's fine. It's not really important, but it's something that most people probably discovered in some sort of statistics class. But if not, it's really not a worry. I actually learned about this technique in a Nate O'Brien video, or like this function. I didn't know you could do this in Google Sheets, but that's pretty cool. So I'll leave a link to that video in the description. But basically what I wanted to show you guys is if you want to, say, look at a 3-year beta, for example, you would have to download a whole different set of data, which I did here. But if you want to do that for tons of different stocks, that's not really practical. Because the beta that's listed on most websites is just this 5-year monthly beta. And then maybe say you wanted to do it daily instead of monthly, well then you'd have to download that daily data instead as well. So as a result, basically what I did is I created this little script here in Python that uses the Yahoo Finance API basically, which I've used before in other videos. So basically right here I can change the number of years that I want to go back in time. And then I can change the ticker right here, and then right here in these two lines is where it's getting the historical data, and in this interval part I can change it to every month, every week, or every day. So right now I have it as the 5-year monthly for Apple, and I'm going to run it, and as you can see it's going to calculate that right here in the bottom. And now you can see it's 1.2336, which is the same value we calculated here as the 5-year monthly beta in our spreadsheet. So as you can see here, this beta of 1.23 is actually different than the beta that is on these other financial websites, which all show around 1.35 or 1.36. Here's it right here. And then on Yahoo Finance, it's right here in the middle. So the reason for that is that we calculated what's called the levered beta, which basically includes all the debt on the company's balance sheet. But these other websites basically calculate what's called the unlevered beta, because apparently that gives a more accurate depiction of the volatility of the company's underlying assets without debt included. But to me personally, it doesn't really seem like that's much use, because a company is going to have debt, so that is going to affect them in the stock market. But that's what they are showing. So that's why there's that difference here. So keep in mind, if you are calculating beta this way, it's going to be a little bit different. And generally the beta that you calculate this way, the levered way, is going to be lower than, or sorry, it's going to be higher than the unlevered beta. But if we remember, these values here are a little bit higher, and that's just because Apple is particularly special, and then they just have so much cash on hand. So actually their levered beta is lower than their unlevered beta, but normally the unlevered beta will be lower, and we'll look at that in a second. So the basic reason I created this script is because you could look at a lot of different betas very quickly. So for example, if we want to look at Tesla's, they are what a lot of people would consider to be a fairly volatile stock. If we look at Tesla's 5-year 1-month beta, it's 2.2. And then if we go on these websites here and look at Tesla, we will see that on these websites, it shows their beta to be, give it a second, 1.97. So that's, in this case, lower. Like I said, most companies, their unlevered beta will be lower than the levered beta that we calculated. So that's just an example. But for example, if we look at every day, 1 day for the interval, for example, for Tesla, it's interesting what happens. As you can see at the bottom here, the beta goes down to 1.26, which is drastically different than the 2.21. So basically what's happening is that it's basically saying if you look at Tesla every day, some of the days really aren't that much, a lot of the days aren't that much different than the S&P, but some of the days are drastically different. And I think, at least with my knowledge of Tesla and what I've seen watching Tesla a little bit, when they run, and when they drop, they drop. So, for example, if you're only looking at it every month, then the amount that they run in a month may be way, way bigger than the amount the S&P runs in a month, or vice versa with them dropping. So that's why that 1 month beta is so much higher. And to me, it seems like I don't see why people wouldn't use the 1 day beta, because if you sample the price every single day, you're going to have a lot more data points. So in my mind, it would be more accurate. But maybe that just makes the betas tend towards 1, and so it doesn't give people as clear a picture of how volatile something it really is. So we've looked at some fairly, what people would say are volatile companies. So let's look at something like J&J that's regarded as pretty stable. So if we're looking at the 5-year 1 day beta for J&J, it's 0.66. And then let's see what happens when we put that to 1 month, how that affects the beta. So when we run that, we get the beta is right around 0.66. So in the case of J&J, when we moved it to 1 month from 1 day, it really did not affect the beta at all. It's still 0.6630 versus 0.6636. So it's pretty similar in that regard. So maybe the 1 month versus 1 day only matters as much if a company is really volatile. I guess that would sort of make sense to me. So I hope this video was helpful, and I hope you guys found it a little bit interesting. The quote of the video is, "The capacity to learn is a gift. The ability to learn is a skill. The willingness to learn is a choice." This was said by Brian Herbert, who was just an author in the US. I don't think any of his books were super popular, but honestly, I just wanted to include this because I just found it really inspiring. So I hope you guys did in fact enjoy the video, and if you have any questions, just leave them in the comments below, and I'll see you in the next one.